Good day. Our topic is Auditors Working Trial Balance. At the end of this discussion, we will be able to understand the nature and purpose of an auditor's working trial balance, formulate appropriate audit adjusting entries, including tax adjusting entries based on reconciliation of accounting income to taxable income, prepare and complete an auditor's working trial balance before and after tax adjustments. Prepare statement of income and statement of financial position based on auditor's working trial balance. So what is a working trial balance? It is a schedule listing the balances of accounts in the general ledger for the current and or previous year with columns for adjusting entries and or reclassification entries and the adjusted amounts that facilitates the preparation of financial statements, specifically the income statement and financial position. It is a working paper prepared by an auditor that shows the results of all adjustments made in the financial accounts as a result of audits of account balances. Also, this schedule is used to determine significant changes or movements on financial account balances by comparing the previous year audited accounts with current year's financial account balances. Let's have an illustration. This problem is a no income tax effect consideration. Below is the trial balance as of December 31, 2018 of Clarity Company as prepared by its accountant. Upon audit, you have gathered the following information for adjustments. Isa-isahin natin yan later. Requirements. As of and for the year ended December 31, 2018, prepare the following. Audit or propose adjusting entries, a working trial balance showing the adjustments and adjusted balances, statement of income, and a statement of financial position. Note that we will disregard the current income tax and deferred portion of income tax expense and or the recognition of deferred tax asset or liabilities. Now, let's start with the requirement A, or the audit adjusting entries. So, isa-isahin natin yung ating mga audit findings. Number 1, the cash account included equipment acquisition fund amounting to 60,000. So, this amount should not be included in cash because this is restricted for acquisition of equipment. That's why our adjusting entry is debit equipment acquisition fund, credit cash, 60,000 pesos. Number 2, goods purchased under FOB shipping point and verified to have been shipped by the supplier on December 28, 2018 were received and recorded by Clarity on January 4, 2019, costing 50,000. Our adjusting entry is debit purchases, credit accounts payable, 50,000. The goods should be recognized because the term is FOB shipping point. The ownership is transferred upon shipment. Number 3, the allowance for doubtful accounts should be adjusted to 5% of accounts receivable. So mag-add lang tayo ng doubtful accounts expense. So our adjusting entry is debit doubtful accounts expense, 9,750. Credit allowance for doubtful accounts, 9,750. So the computation is the balance of accounts receivable times 5% less yung balance ng allowance for doubtful accounts para ma-determine natin yung increase na 9,750. Number 4, the company purchased 100 shares of its 100 par value share capital for 30,000. The amount having been charged to the investment account. Okay? So our adjusting entry is debit treasury shares, credit investments, 30,000. Number 5, except for equipment purchased on June 30, 2018 for 20,000 cash, all equipment were acquired at the inception of the company 3 years ago. Depreciation for 2018 has not been recorded. Our adjusting entry is depreciation expense, 39,200, credit accumulated depreciation, 39,200. So this is the computation. the first thing to do is to deduct first the equipment acquired on June 30, 2018 to get the annual depreciation of the old equipment amounting to 38,200 per year. Thus, we were able to determine the annual depreciation rate, which is 10%. Then, we can now compute the depreciation of new equipment, which is amounting to 1,000 pesos. So, our total depreciation is 39,200. Okay. Next is prepaid expenses include 4,800 insurance premium on 1-year insurance policy taken on October 1, 2018. Our adjusting entry is debit insurance expense 1,200, credit prepaid expenses 1,200. So we have recognized the expired portion of the prepaid insurance. Next is unearned rent income on December 31, 2018 amounted to 10,000 pesos. Our adjusting entry is debit unearned rent income, credit rent income amounting to 2,800. So we have recognized the earned portion of unearned rent income. Number 8, accrued expenses on December 31, 2018 amounted to 54,000. Our adjusting entry is debit miscellaneous expenses, credit accrued expenses amounting to 3,000 pesos. Next is a physical inventory taken on December 31, 2018 revealed goods costing 600,000. Our adjusting entry is debit inventory and 650,000 pesos, debit cost of goods sold 2,408,000, credit purchases 2,474,000, and credit inventory beginning 584,000. We can also compute the cost of goods sold by inventory beginning plus purchases, which is goods available for sale, less ending inventory equals cost of goods sold. Based on our audit adjusting entries, we can now prepare the working trial balance showing the adjustments and adjusted balances. So, this is the working trial balance. Sa first column, nilagay natin yung client's trial balance before adjustments. Then, we have reference. Then, yung ating proposed adjustments. Then, the auditor's proposed adjusted trial balance. Based on this, we can prepare the income statement and the financial position. For our last requirement, here's the statement of income and statement of financial position. As you can see in the statement of income, the rent income is presented under other income, assuming the company is not primarily engaged in a leasing business. And for our operating expenses, we have selling and administrative. For our statement of financial position, the accounts receivable is presented net of allowance for doubtful accounts. The same thing with the property and equipment, which is composed of furniture and miscellaneous, is also presented net of accumulated depreciation. Investment is normally classified as non-current. Yung equipment acquisition fund, classify natin siya as non-current, but kapag yung acquisition will be made within 1 year after the reporting period, then it will be classified as current. Then the profit is close to retained earnings. Treasury shares is presented as deduction in the equity section. Let's have another illustration. This problem is with income tax effect consideration. ABC Corporation provided you the following trial balance as of December 31, 2018. Okay. Upon audit, you have gathered the following information. Yan. Iisa-isahin natin yan later. Income tax rate is 30%. The company recognized DTA and DTL. Okay. Disregard value-added tax effect. Requirements. As of and for the year ended December 31, 2018, prepare the following. Audit adjusting entries, a working trial balance showing the audit adjustments, reconciliation of accounting income to taxable income tax adjusting entries, final working trial balance after tax adjustments, statement of income, and statement of financial position. Now, let's start with the requirement 1 or yung audit adjusting entries. Number 1 is, included in cash is the post-dated check received from customer amounting to 20,000. The date of the check is January 5, 2019. Our adjusting entry is debit, accounts receivable 20,000, credit, cash 20,000. Because this amount is not yet available for immediate use. Next is expired portion of prepaid insurance amounted to 5,000. Our adjusting entry is debit insurance expense 5,000, credit prepaid insurance 5,000. Next is accounts receivable that are doubtful of collections amounted to 25,000. Our adjusting entry is debit doubtful accounts expense 25,000, credit allowance for doubtful accounts 25,000. Next is unearned rent income of 60,000 was received only in 2018, of which 30,000 is earned. The remaining 30,000 will be earned in 2019. Our adjusting entry is to recognize the earned portion of the rent income. So debit unearned rent income 30,000, credit rent income 30,000. The information for number 5 to 7 will be used later. Okay. For our requirement 2, here's the working trial balance, showing the auditor's proposed adjustments. Since this problem is with income tax effect consideration, the first thing to do is to determine the profit before tax based on adjusted revenues and expenses accounts. Okay. Since this is the first step in preparing reconciliation of accounting income to taxable income to determine the income tax effect, the income tax expense, and income tax payable. This is how we do the reconciliation of accounting income to taxable income. We will start with the accounting income, which is yung profit before tax. Okay? Accounting income, 843,000. Then add natin yung non-deductible expenses. Based on our audit information, yung doubtful account expense is a non-deductible item. Okay. This account is a future deductible expense. But why not deductible at the time of recognition? Okay. Since the amount is only doubtful of collection, it is not yet deductible for tax purposes as there is no legal basis yet for its deductibility. Our adjusting entry is debit, deferred tax asset, 7,500, credit, income tax expense deferred, 7,500, or yung 30% ng 25,000. When deductible? At that time, the accounts receivable is considered worthless or uncollectible, and upon complying with the requirements of the BIR under Revenue Regulation Number 25/2002 for its deductibility. In this case, the company should be able to demonstrate that the accounts receivable are indeed uncollectible with sufficient proof that all efforts to collect have been exhausted. So, dapat merong collection effort sa part ng taxpayer or company. Example is yung collection made through independent collection lawyer. Next is other taxable income. Okay. Based on our audit information, yung ating other taxable income for tax purposes is unearned rent income of 30,000. Okay. This item is a future deductible item. We will discuss that later. Okay. Why not taxable at the time of recognition. The income was already received, although not yet earned. Under the tax basis, income is taxable when received regardless of when earned. This is supported and further explained in RMC number or Revenue Memorandum Circular number 16-2013 issued by DBIR. Okay. Since this is a future deductible item, our adjusting entry is debit deferred tax asset, credit income tax expense deferred, 9,000 or the 30% of the 30,000. Okay. When become a deductible item? At the time the income is earned. The reason is that when it is earned, the company records it as income from a liability account unearned. As a result, this is included in income account in the year it is earned. Thus, it shall be deducted from the said income account as it was already subjected to tax. Okay? This is also to avoid double taxation. So yung magiging adjusting entry natin at the time na gagamitin na natin siya as deduction, i-reverse lang natin itong entry natin. Okay? Next is, less natin yung mga non-taxable income for tax purposes. Based on our audit information, interest income is not taxable, okay, for tax purposes. This item is a permanent difference. Why not taxable and thus being deducted in determining taxable income? Because interest income on deposits is subject to or was subjected to final tax. So, hindi siya subject sa regular income tax. That's why permanent difference siya. Then, we have no tax adjusting entry. It can never be taxable under the regular income tax. Next is the unrealized forex gain. This item is a future taxable income. But why not taxable at the time of recognition? Because foreign exchange differences from year-end conversion of foreign currency denominated assets and liabilities are considered unrealized and should be treated as temporary tax difference. Thus, unrealized forex gain on cash in bank dollar is not yet taxable or deductible in case of forex loss at the time of recognition of forex difference. So, unrealized pa siya. Okay, that's why hindi siya taxable at the time of recognition. So, our adjusting entry is debit income tax expense deferred, credit deferred tax liability 7,200 or yung 30% ng 24,000. So, yung credit natin is deferred tax liability dahil future taxable income siya. Okay. When taxable? When it is realized. In case of forex gain on cash, at the time of the actual conversion of cash dollar to peso. In case of forex gain on receivables or payables, at the time the receivables and payables are collected and paid respectively. Next is other deductible expense. So, wala tayong other deductible expense. Based on this information, we can now compute the taxable income in the income tax expense. Okay? So, yung accounting income na 843,000 plus 25,000 plus 30,000 less 15,000 less 24,000. Then, our taxable income is 859,000. This is the taxable amount that will appear in the income tax return. Multiply natin siya ng 30%, then we will arrive at the regular corporate income tax or yung tinatawag nating RCIT amounting to 257,700. RCIT is the income tax expense current. The next is compute natin yung minimum corporate income tax. Pero titingnan natin kung subject yung company sa minimum corporate income tax. Okay? The MCIT is applicable to company since it started operations in 2014. Thus, it's already 4 years from incorporation date. MCIT is imposed on taxable gross income. Then, this is computed as follows. Sales na 3.5 million, less natin yung cost of sales na 2.1 million. Then, we have gross profit na 1.4 million. Then, add natin yung rent income na 150,000 plus yung other taxable income for tax purposes na unearned rent income of 30,000, we will arrive at the total taxable gross income of 1,580,000. Then, multiply natin siya sa MCIT rate na 2%, we will arrive at minimum corporate income tax na 31,600. Important notes on MCIT. MCIT is applicable only to domestic corporations on the beginning of the fourth taxable year from the year such corporation commenced its business operations. MCIT is imposed on taxable gross income, that is before deducting operating expenses and other losses. Excess of MCIT over RCIT is recorded as deferred MCIT, an asset, which can be credited or deducted within 3 years against future income tax due from RCIT. So kung mas mataas yung MCIT over dun sa RCIT, yung excess nun, nire-record natin siya as deferred MCIT. Deferred MCIT cannot be credited against MCIT itself. This means that when a domestic corporation is subject to MCIT for the current taxable year, any deferred MCIT from previous years cannot be deducted against the MCIT for the current taxable year to arrive at the income tax payable for the current year. But any taxes paid, yung mga quarterly RCIT and MCIT and creditable withholding tax during the year can be deducted from MCIT due for the current taxable year. This is in accordance with the Revenue Regulation Number 12, 2007. Since the RCIT is higher than the MCIT, then the company's income tax due is the RCIT. Thus, income tax payable is computed as follows. Income tax due from RCIT, 257,700, less natin yung prepaid taxes na 53,000. Ito yung mga income taxes paid during the taxable year and or previous years, including creditable withholding tax withheld by the customers. Then, yung deferred MCIT from previous years. So, based on the information, walang deferred MCIT. Again, this is creditable only against RCIT. Then, we can now compute the income tax payable. Our income tax payable is 204,700. This is the current tax liability. Our tax adjusting entry is debit, income tax expense current, 257,700, credit, prepaid taxes, 53,000, credit, income tax payable, 204,700. This is to recognize income tax expense and payable for 2018. Since the company is not subject to MCIT, no deferred MCIT is recognized in 2018. Then, the summary of all adjustments. Audit adjustments before tax reconciliation, and tax adjusting entries. Based on this information, we can now finalize our working trial balance. Then, ito na yung ating final working trial balance. As you can see, highlight natin yung mga affected accounts ng ating tax adjustments. So, from client's trial balance to auditor's proposed adjustments, then income statement before tax adjustment in order for us to determine the profit before tax, para sa ating reconciliation of accounting income to taxable income. Then, we have our auditor's proposed tax adjustments based on our reconciliation. Then, finally, we have the adjusted trial balance. Then, ito yung magiging base natin sa preparation ng statement of income and statement of financial position. For our last requirement, ito na yung ating statement of income and statement of financial position. So, sa statement of income, from revenues to profit before tax, 943,000, less natin yung income tax expense, which is composed of income tax expense current from RCIT na 257,700, then yung income tax expense deferred dun sa DTA and DTL na merong net na 9,300. So, yung bale, yung income tax expense natin, 248,400, deduct natin siya dun sa profit before tax, then we will arrive at net profit for the year na 594,600. Dun sa statement of financial position naman, yung accounts receivable is presented net of allowance for doubtful accounts. Yung property and equipment is also presented net of accumulated depreciation. Then yung deferred tax asset, for presentation purposes, net din siya ng deferred tax liabilities. Kung mas mataas naman yung deferred tax liabilities, presented din siya under non-current liabilities, net siya nung deferred tax asset. For our equity, share capital, then retained earnings. Yung net profit, close natin sa retained. Other auditors working trial balance illustrations. Illustration 1, no income tax consideration. So as you can see, from adjusted trial balance to auditor's proposed adjustment, then yung auditor's proposed adjusted trial balance. So kung walang income tax consideration, we gonna prepare the income tax statement and the financial position. Okay? Illustration number 2, ganun pa rin, no income tax consideration, pero mas expanded siya from unadjusted trial balance to auditor's proposed adjustment, then auditor's proposed income statement, and then yung auditor's proposed financial position. So instead of adjusted trial balance, dumiretso na tayo sa income statement and financial position. Then yung net income is close to retained earnings. Illustration 3, with income tax consideration. So in this case, the company is subject to MCIT. So tingnan natin kung paano siya nakuha. Yung profit before tax natin is 80,000. Yung susunod na gagawin natin is yung reconciliation of accounting income to taxable income. So accounting income is 80,000. Then add natin yung non-deductible expenses tsaka other taxable income. So based dun sa problem, walang non-deductible expenses and other taxable income. Ganon din yung non-taxable income tsaka other deductible expenses. So, yung taxable income natin is 80,000. Multiply natin ang income tax rate na 30%. Then, we will arrive at regular corporate income tax na 24,000. So, ito yung ating income tax expense current. Then, compute natin minimum corporate income tax. Assuming the company is at 4 years of its operations or operates more than 4 years already. Then, yung minimum corporate income tax natin, compute natin sales na 3.5 million, less cost of sales na 2 million, meron tayong 1.5 million, plus natin yung other taxable income, since dun sa problem wala, yung total gross taxable income natin is yung 1.5 million. Times natin ang MCIT rate na 2%, then yung minimum corporate income tax natin is 30,000. So since mas mataas yung minimum corporate income tax dun sa regular corporate income tax, ito yung magiging income tax due natin. Okay, so now we will compute the income tax payable. So income tax due from MCIT na 30,000 less prepaid taxes. So since dun sa problem walang prepaid tax, yung income tax payable natin is yung 30,000. Thus, for the year 2019, the company is subject to MCIT of 2% of gross taxable income. As a result, deferred MCIT, which is yung excess ng MCIT over RCIT, is recognized in 2019. So, ito yung ating adjusting entry. So, income tax expense current from RCIT, yung 24,000. Then, yung deferred MCIT na 6,000, which is yung difference ng 30,000 dun sa 24,000. Ito yung asset natin na magagamit natin within 3 years as a deduction dun sa income tax due from RCIT. Then, yung income tax payable natin na 30,000. Yun yung MCIT. Based on our adjusting entry na debit income tax expense current 24,000, debit deferred MCIT 6,000, then credit income tax payable na 30,000, post natin siya dun sa working trial balance. Deferred MCIT is presented as part of deferred tax asset. Okay? So, ito na yung ating final working trial balance. So, from unadjusted trial balance to auditor's proposed adjustments, then dun sa auditor's proposed income statement, then dun sa proposed financial position. Yung mga nominal accounts are close to retained earnings. Then we have illustration 4. Yung data nito is galing dun sa illustration 3. So in this case, kinumbine natin yung debits and credits. Yung positive amount means debit, then yung negative amount or yung amount with close and open parentheses means credit. Additional columns for prior use balances and other information can be added for audit analysis. Important reminders for students. For CPA board exams, normally CPA board exam questions disregard the income tax effect, or if there is income tax effect, it is usually the effect in the profit of corporate income tax of 30% or any rate as stated or as required in the problems. For actual practice, consider all the income tax effect in the financial transactions, that is the effect of corporate income tax, minimum corporate income tax, withholding taxes, deferred taxes, value-added taxes, other percentage taxes, and other taxes as and when applicable. Ito yung ating mga reference and sources. That's the end of our discussion. Thank you.